Hello everyone, welcome to 3D Finance. Today's video will provide a comprehensive analysis of Figma's huge threat to Adobe and the battle for dominance between the two companies. In the first part, we will cover the fundamentals of the companies, highlighting the differences and competition between Figma and Adobe. The latter part will analyze Figma's market potential, valuation outlook, as well as its short-term price movements and targets. For viewers mainly interested in the stock price trends and short to medium-term targets, feel free to skip ahead to the second part. Part 1: Figma versus Adobe Overview. In the world of design tools, Adobe was once the undisputed king. But Figma is rapidly rising, disrupting the status quo at an astonishing pace and becoming Adobe's biggest challenger. The relationship between Figma and Adobe is like Tesla versus Toyota in the design world. Figma champions cloud-based collaboration and real-time editing, fundamentally transforming traditional design workflows. Adobe, by contrast, resembles a legacy automaker, technically solid, but slower to adapt to change. Figma and Adobe are also reminiscent of Apple versus Nokia in the mobile industry. Apple revolutionized user interaction with smart devices. Figma may be the next big disruptor. Historically, Adobe never truly entered the full product development collaboration chain. Figma, on the other hand, built its innovation precisely around that full-cycle collaboration. What is paradigm innovation? It refers to a shift in the mental models and operational norms that drive business activities, impacting the entire value chain of delivering products and services to users. This isn't a simple, incremental improvement, it's a fundamental, disruptive transformation. Paradigm innovation focuses on the creation and dissemination of new ideas, technologies, and methods to generate new forms of value. Full chain collaboration and Figma's innovation. So what exactly is end-to-end product design collaboration? In modern software development, this is a core workflow. It typically starts with a product manager defining requirements, drafting documentation, and proposing user scenarios. Then designers use tools like Figma to create wireframes and UI/UX prototypes. Developers take those designs and translate them into code, both logic and front-end, requiring seamless, fast, online collaboration among all three roles. True full-chain collaboration isn't just about shared tools. It's about real-time communication, editing, annotation, and delivery on a unified platform. This is something Adobe failed to achieve. That's also why, in 2022, Adobe spent $20 billion to acquire Figma. Without that acquisition, Adobe's entire Creative Cloud business could face an existential challenge within 5 to 10 years. It was a move similar in strategic importance to Microsoft acquiring GitHub or LinkedIn, far more about long-term positioning than immediate financial returns. Adobe's traditional workflow is siloed: design, export, then hand off to developers. It's a disconnected, offline, single-point process already obsolete. The acquisition of Figma prompted Adobe to accelerate development of Adobe XD to compete directly. But even XD still falls short of Figma's ecosystem, real-time collaboration, and developer integration. Figma integrates everything: design, discussion, delivery, plugins, and data linking into a unified platform. Its dev mode is a dedicated workspace for developers within Figma. It provides a developer-friendly environment to inspect design files, access specs, and even generate code, allowing developers to hover and click on design elements like they would in a browser inspector to get measurements, styles, and metadata without altering the design itself. Figma was built from the ground up with collaboration in its DNA. In contrast, Adobe's tools were designed primarily for content creation in advertising, animation, and print, not for modern product design collaboration. Adobe's traditional products cannot auto-generate developer views, annotate components, or show dimensions. Nor do they offer a rich plugin ecosystem. Developers often depend on designers to export PNGs or zip files, resulting in time lags and communication gaps. Figma supports real-time, multi-user editing and collaboration. It's like shifting from building traditional cars to creating EV's new architecture, new mindset, painful transformation. Growth engine, ecosystem, and Adobe's existential risk. Figma's product flywheel spins faster because it follows a product-led growth, PLG, strategy. It has a low entry barrier, free to start, widely promoted in education, and open to developers. Figma now has over 13 million users, and about 1/3 of them aren't even designers, they're everyday professionals. Many young designers start using Figma in college and are less familiar with Adobe tools. Like Slack, Notion, and Zoom, once one team adopts Figma, it often spreads across the entire organization. What Adobe fears most is that Figma becomes the Slack of design, capturing the mind share of creative professionals. Why can't Adobe just copy Figma? First, Adobe builds tools for creators, Figma builds a platform for collaboration. This is a fundamental difference in philosophy. Adobe has never truly entered the full-cycle product design collaboration loop. Figma, from day one, defined and led that loop. Second, Figma's business model is far more scalable. Its freemium approach for collaborators dramatically lowers adoption friction and encourages viral growth. Lastly, user experience and brand perception are shifting. Young designers and developers prefer Figma's minimalist interface, vibrant community, and open ecosystem. Adobe is starting to feel like the parent's tool, while Figma is being embraced as the tool of the future. It's not that Figma has already won. It's that it has the potential to become Adobe 2.0, a risk Adobe simply can't afford. In summary, Figma represents disruptive innovation within the design industry. Established players like Adobe fear challengers who refuse to play by the old rules and instead rebuild the system from the ground up. With the rise of AI-enhanced workflows and real-time human-computer interaction, this paradigm shift is accelerating, leaving Adobe increasingly unsettled. IPO Shockwave and strategic parallels. Figma's IPO sent shockwaves through the design industry, putting the company on the map in a dramatic way. It was like when Tesla disrupted Toyota, Apple displaced Nokia, or Robinhood overturned traditional brokers. A new AI-powered design heavyweight was born. Part 2. Let's now shift to what people care most about: Figma's stock valuation, mid to long-term potential, and short-term price action. Figma's commercial potential is enormous. In the medium to long term, 3 to 5 years, its total addressable market, TAM, is estimated at $33 billion. How is this $33 billion TAM composed? According to reports from Adobe and various VCs, it breaks down into 4 key segments. 1. Core design collaboration tools, like Figma itself, $16 billion. O includes UI/UX design, prototyping, and collaboration. 2. Digital whiteboard tools, like FigJam, $8 billion. 3. Developer handoff collaboration tools, $5 billion. O competitors include Zeppelin, Abstract, and other dev handoff tools. 4. Documentation and knowledge collaboration tools, $4 billion. O competing in the space of Notion, Confluence, etc. This $33 billion TAM represents a forward-looking market projection, not current revenue. Besides Adobe, Figma also faces competition from top-tier UI design tools like Sketch and rising platforms like Mastergo that support AI-driven design and team collaboration. Assuming a moderate scenario where Figma captures 30% of this TAM, that would equate to $10 billion in revenue with a 90% gross margin. If net profit margin reaches 60%, that's $6 billion in annual net income. At a 50x price to earnings, P/E, ratio, Figma could be worth $300 billion. Based on current growth rates, 48% revenue growth in 2024, 46% in Q1 2025. Figma could reach $10 billion in revenue within 5 years, well before 2030. That implies a possible market cap of $300 billion by 2030. with a corresponding stock price of $513, establishing it as a SaaS powerhouse. PO dynamics, circle comparison, and institutional moves. In the short term, Figma's IPO followed a playbook very similar to that of Circle, a company that also rode a wave of hype. On June 5, 2025, Circle held its IPO at $31 per share, issuing 34 million shares. The offering was 25 times oversubscribed, raising $1.1 billion. The stock surged on its debut, closing the day at $83.23, a 168.48% gain with an intraday high of $298.99. Figma's IPO mirrored this closely. It priced at $33 per share and issued 36.94 million shares. Its subscription ratio was even higher, 30x oversubscribed. Using a Dutch auction pricing model, it raised approximately $1.2 billion. On IPO day, Figma didn't open until 2 p.m., a rare delay due to high demand, and then soared. It closed at $115.50, a 250% gain. But the next day, as all three major U.S. indices plunged, Figma's stock dipped by 5.63%, ending at $122. In after-hours trading, it dropped another 6.97% to $113.50 below its first-day close. This raises the big question. Will Figma continue to decline with the broader market, stabilize, or resume its upward trend? Conclusion. If a systemic market correction occurs, Figma may undergo a moderate pullback. But before the lockup period ends in January next year, it's likely to resume its upward trajectory. With a short-term price target of $170.94, implying a $100 billion market cap. For context, Figma's IPO opened at $85 per share, while Circle's opened at $69. Both with similar float sizes, but Figma had stronger demand and better fundamentals. Now consider macro conditions. With the Fed poised to begin a rate-cutting cycle, Circle, which earns primarily from interest on short-term U.S. Treasuries, faces headwinds. But Figma, with its scale, profitability potential, brand strength, and a staggering 91% gross margin, stands in stark contrast. That's why Cathie Wood's ARK Invest bought 60,000 shares on IPO day at a cost of $69.3 million, or $115.50 per share. Interestingly, that was also the closing price on day one. The following day, when the stock fell to $113.50, it dipped below ARK's cost basis, making it highly likely that institutional investors like ARK will aggressively add positions whenever the stock trades under $115.50. Their short-term target remains a $100 billion market cap, or $170.94 per share. A valuation that reflects both the Circle-style growth narrative and respect for Adobe's current $150 billion market cap. In other words, while Figma is challenging Adobe, it's not yet ready to dethrone it entirely. So the market caps Figma's valuation out of respect for the incumbent's revenues, profits, and brand equity. In an extreme bull case, the maximum speculative target is $205 per share, or a $120 billion market cap. Valuation logic, SaaS benchmarks, and future outlook. Is a $100 billion market cap for Figma reasonable? Let's analyze it in the context of SaaS valuation benchmarks. In the SaaS space, valuation is often based on a multiple of forward revenue. For high-growth companies with strong margins, this multiple typically ranges from 10x to 30x. Assuming Figma reaches $5 billion in revenue by 2027. At a 20x revenue multiple, its valuation would be $100 billion. This scenario is quite conservative given Figma's high growth rate and massive TAM. Even if growth slows slightly, maintaining 40 to 50% annual revenue expansion over the next 3 to 5 years would still result in enormous compounding. Figma's 91% gross margin is almost unmatched in SaaS. Even elite companies like Palantir and Datadog operate at gross margins in the 75 to 85% range. Palantir, for example, has hovered around a $40 to $50 billion valuation with lower revenue, lower margins, and lower growth. Figma's flywheel community-driven, bottom-up adoption, and network effects creates extremely low customer acquisition costs. This makes it a textbook PLG company, capable of scaling without massive sales overhead. Another point to consider: Figma is moving into adjacent categories beyond design collaboration, documentation, whiteboarding, even AI-assisted creative work. It's not a single product company, it's becoming a platform. This echoes the trajectory of Adobe decades ago, which evolved from a PDF tool to a creative empire. Figma may follow that same path, but optimized for the cloud-native, collaboration-first, AI-augmented future. Final disclaimer: all views expressed here are personal opinions. Investors should conduct their own research and make decisions carefully. I am not responsible for any gains or losses resulting from investments based on this article.